It's Monday, November 16th, and we've got the markets firmly in the green following vaccine news out of Moderna. I'm Catherine Ross, and I am joined by Jim Cramer. Jim, what's Action Alerts Plus watching in this market?
Well, we think that there's too much negativity about some stocks that have, frankly, lots to do with going out and lots to do with commerce. For instance, UPS, which is very much involved with the distribution of the vaccine, is very much involved with e-commerce. I don't necessarily think that this is going to be a non-Amazon Christmas, given the fact that no one's going to get these vaccines anywhere near the time that people think that they're going to. So there's a definitely, I think, a very unrealistic aspect. I am a huge believer in Moderna. That was spectacular, and Pfizer spectacular. But the one thing that's not spectacular is the distribution, because we're just not hearing anything about it. And because we're not hearing about it, we know that it's a transition issue. And whenever the president is deeply focused on keeping it entrenched, it's just another day that we just feel like we don't really know what's going to happen. I mean, how fabulous would it be to actually have, okay, these guys have this many, and we're going to give it to the elderly, and this many we're going to give it to the we're going to give it to first responders, and this many what we're going to do is we're going to give it to the super spreaders, younger people, and we don't have anything. And because we don't have anything, once again, the government is behind where private industry is. And it's just driving me crazy. Private industry is doing such a better job than the government.
Well, and Jim, what you just said, I think, actually accounts for some of the over bullishness that we've seen so far, because the question that I want to ask is, how can investors be more realistic about buying stocks that are tied to a great reopening and a fast return to normal when we don't know what kind of stages we're going to be going to in order to get to that new normal?
Well, I do think it's completely premature. However, we're in a very we're in a moment that historically has been very good, leading up to Thanksgiving. We are in a moment where the marginal buyer is a newer investor, maybe using ETFs, and we find ourselves with tremendous buying, say, for instance, between 4 a.m. and 6 a.m. I have no idea who these buyers are, but they are not willing to wait. And this level of bullishness is extraordinary. And the market's dramatically overbought, but it means nothing. So I have to readjust myself as I look at prices, and I see certain stocks just on fire, and I struggle to know why. I mean, why is JP Morgan up $3? There's nothing in the interest rate in bonds that indicate that it should be. Why is Goldman Sachs up 3? Well, it's only up 3 now. But I mean, I look at some of these stocks. Why is Honeywell up 6? There is no reason for it to be up 6, but we own it, so I'm thrilled. I'm not going to look through it. I happen to think that we're about to get some very good news on Boeing, and that people should go buy the stock of Boeing. But it's up 12 already. It's almost at 200. Now, normally I would say you miss Boeing, but not in this market. In this market where Darden is now above where it was before the pandemic, you have to recognize that people now view stocks as being undervalued versus where people thought they were overvalued going into the pandemic. Remarkable how the valuations have switched, and the buyers seem to be so bullish at a level that is frankly I've never seen before. It is not 1999 whatsoever. They're bullish about companies that are doing well. They're too bullish about companies that are doing well, but maybe they just believe that stocks are very inexpensive and that bonds are very expensive. So I am not going to denigrate these buyers. I think that they know what they're doing. They're aggressive. I don't like to be that aggressive, but you know what? Think about it. How great have they done? I mean, I'm looking at all these stocks and they're all up. I don't know.
Jim, let's circle back to Moderna, because I think that this opens up an opportunity. What you've just been saying about over bullishness, I think that there's an opportunity here to talk more about vaccine stocks in general. Now, if our members don't know, Moderna's efficacy rate did come in at 94.5%, which is much higher than expected, actually beats out Pfizer, which we know from last week came in at 90% efficacy. So let's take a step back for investors watching this. What are you thinking, Jim, when it comes to vaccine stocks?
Well, the vaccine stocks, I think J&J is going to be a winner. Pfizer is too big for it to win. Moderna's got the house bet on it. I don't know about Novavax, but I'm sure that there are people who will say that that's a great place to be. I want to be now in CVS, which is one of ours, because CVS is going to deliver it. And that's where I think the big questions are, is the delivery. So why not go with that? And that's my bet. That and UPS are the two best I have, because I think that those are the ones that have to do with getting it to you. McKesson, too. McKesson's going to make a ton of money. Otherwise, I look at it and I say, what are we kidding? Don't be so aggressive. But you know what? They couldn't. If you bought these stocks, let's say you bought the cruise lines at 5 a.m., you're doing okay. How is that possible? Well, because this is a very different kind of market. This is a market that is thrilled to pay up and has no patience. And patience is completely lacking because patience has not been rewarded. It hasn't been.
Jim, when it comes to rolling out a vaccine, getting a vaccine, it sounds like your plan right now is to play the rollout feature, not just the vaccine feature of this, the next 6 to 8 months, correct?
Correct. I've not been a big player of the vaccines because they're too binary. But the rollout often has more than one call. And CVS is changing its business model fast. It seems to be working. And what we have with UPS is that Carol Tomei has come on Mad Money and told us she's not going to blow the quarter. Now, that's important because UPS has blown the quarter consistently for years because they'd never been ready for e-commerce. So, you got a lot of reasons to like it. That's what I'm looking for. I am looking for reasons to like something because the market has a predilection to like things. I'm looking for reasons to like it.
On Friday, Jim, you ran through your game plan for the week, but we've got surprising news this morning. So what's your approach now due to this boost from Moderna?
Well, it's the same. I was reacting to Pfizer, and Moderna's it's like reacting again to Pfizer. I mean, I just think that those stocks are good stocks to own, and I feel like that the ones. I mean, I happen to think that the number one stock to own in the country is Boeing, because I think you can get the max. I think you got a president that is going to have a great rapport with China because he insists on being not leading, but being part of TPP. That's what's going to happen. And that Boeing, if they get the plane going, then buyers will come in, even if there's nothing to do or see, because they're not constrained by the facts. The buyers aren't constrained by the facts.
But Jim, we are currently in the third surge of this coronavirus, and so far we're hitting numbers that we haven't seen before, with over 100,000 cases
means nothing to these people. It means horrible things for the people who are on the front line, the nurses, doctors, but it doesn't mean anything to the buyers. I mean, the buyers have looked through the death rate and looked through the caseload and just decided those are irrelevant. What matters is what it's going to look like next year when we don't have it. And that's their game. I mean, I'm looking at all sorts of stocks that are just extraordinary. They're just extraordinary. So, I mean, I would continue to believe that what happens here is that that the buyers don't quit. We're in a seasonally strong period. Thanksgiving. The Black Friday is kind of like black every day because we've got a continuum. People are already advertising this weekend. You saw it on football. So I just think that you can't sate the buyers. That's what's going on. You cannot sate these buyers.
But looking just at Boeing, I'm curious to know what your thoughts are with what's going on with the airlines. I mean, can they afford the new Boeing planes down the line right now, especially without a stimulus package?
They don't. It doesn't matter. It doesn't matter to the buyers. It matters to you and me. It matters to anyone who wants to look at the facts and try to figure out the vacuum and how to get it so that an American can buy planes. But these buyers aren't fearful. They think that it's just a matter of time that everything works out. And I think it's remarkable that that's where we are. But there's no two ways about it. These people are thrilled to pay up for anything related to the economy. And again, I've never seen it before. I totally respect it because I have not respected it, and that's been wrong. And you can bank on it, which is extraordinary. What am I going to say? It's extraordinary. We haven't seen it.
We definitely live in unprecedented times. Jim, I was reading your Real Money column this morning, and this quote stood out to me. Now, you say, and I quote, "It's sobering, but it's not all bad for the stock market, in part because companies will no longer have to play with one hand tied behind their backs, in part because so many company CEOs never believed in the Trump agenda anyway." So what do you expect to see from this market, especially with what we've just been talking about these buyers under Biden?
Well, the buyers, the tax rate's going to go up for everybody. We accept that. And you could argue that that's going to move. The top-down people are going to be possessed by how the S&P is going to go down. But you have a lot of CEOs who, when Carrier moved that plant to Mexico, and when Ford moved plants to Mexico, those people were. It never happened again. People just never did that again. I think that Biden is just not going to be harsh. I mean, think about it. What really intimidated people was not that there was legislation. It was tweets, and the notion that you'll get tweeted, and if that happens, that your life will be made miserable. And that's how he did it. That's how the president did it. He made people's lives miserable, which then made people realize, you know what? We better move out of China. I mean, he used his bully pulpit to get people out, and it worked. And I think that is going to go away. I just cannot imagine that's going to continue.
Jim, you talked this morning about T-Mobile, and your commentary kind of sparked a question for me, which is T-Mobile a stock for Robinhood investors to consider?
They're not in there, and yet they should be considering that because it is got fabulous growth. It's a millennial stock. The millennials use T-Mobile. They just haven't discovered it, I think. I mean, I think they just don't relate it, but they should. It's a pretty good situation for them. It's a great situation if you like growth. I mean, I have gotten this one wrong. I did not think that they would be consistently right. I did not know this Mike Sievert fella. I chose to be able to say, you know what? I got to wait and see. And that was wrong. Again, come back to this idea that patience is not a virtue in this market.
And I want to just give some stock prices. So right now, T-Mobile technically is the most expensive at $127 a share compared to AT&T, which is it's about $29 a share, and Verizon I'm looking at right now is about $60 a share. It's worth me paying up that $127 rather than getting AT&T or Verizon? Well,
it depends. I mean, if you want income, no. If you want income, then you definitely don't want to do that. You most certainly want to own Verizon. I don't know a scenario where you want to own AT&T. They're just not doing well enough. The Time Warner deal's so far not working out. They haven't been able to sell enough to be able to make it so that I feel like that their balance sheet's okay. T-Mobile is just a classic growth stock, as if you wanted to go buy NVIDIA. It doesn't have NVIDIA's growth, but I mean, it's a growth stock like that. And I think that people have to start thinking that it's a growth stock, or else they're going to miss even more points because it's been a remarkable performer. I remember when it was the 78th list time I interviewed John Ledger. So it's just been a huge win.
Speaking of remarkable performers, I want to take a step back because you mentioned Darden just a little bit ago. And with all of this vaccine news, we've been talking about these buyers and how they love this market. So I have to ask, what does the vaccine news mean for these public restaurant companies, such as Darden, such as Chipotle, such as McDonald's?
The idea for them is that 40% of the restaurants that they compete with will probably go under. The whole winter will be made... will obviate these. You'll eliminate all this competition that's from outdoors. The vaccine comes, and then they'll be reopened, and the competition, like my places, will not be able to reopen. So it's really a bet on the idea that most people won't that there'll be a gigantic amount of restaurants that go under and no stimulus. So that is, I think, a very good bet. No stimulus and gigantic amount of people who will be hurt. That is just exactly what is going on, and it's a play against the government's ability to be able to help people.
Now, we had some M&A activity announced late yesterday and early this morning. I first want to talk to you about the PNC deal. They're buying the U.S. operations of BBVA for about $11.6 billion.
Yeah.
Did you like this deal?
Oh, very much. You see, what's happened is that they're now in 29 of the 30, right? 29 of the 30 big markets. They ended up stealing this, as far as I'm concerned. And the reason I say they stole it is because, think about it. BBVA needed the money, right? BBVA was in trouble. All the foreign banks are in trouble. So suddenly they had this asset. PNC sold its BlackRock stake and rolls it into this. They gain a huge amount. It really is a remarkable thing for them. I just think that this was just fantastic. And I can't emphasize enough about how great it is. And the PNC should be up a lot. But then again, I mean, at a certain point, what happens? At a certain point, the banks, if you remember, the banks then end up going down. And that's my biggest worry if I were, that's my biggest worry.
And then we've got a deal out of Home Depot. Home Depot's buying HG Supply for $8 billion. Action Alerts Plus used to own Home Depot. So how would you approach this acquisition?
Well, it was a great acquisition for Home Depot. You know, they sold it. They needed this business because this had maintenance and repair operations, and that is something that fits perfectly with HD because it involves tens of thousands of clients if you look at the website. So very smart move. Frank Blake did get rid of it. In retrospect, that the company was very troubled right then, and he took action. I think we forget how much trouble they were in. But now they're not, and they have the firepower, and it's a really good move by them.
And with that, we are now heading over to our members-only exclusive Action Alerts Plus daily rundown show over on actionalertsplus.com. Head on over there with us for more of Jim's insight. I'm Catherine Ross, and we'll see you tomorrow.